With me this afternoon is a dear friend and Jonny Price. We've known each other for, 5 years now?
Decades.
Long time.
Yep.
So I remember getting this like random phone call from you. Yeah, it was 2014.
Mm-hmm.
But I had tweeted at you, so that's why I got the random phone call.
Like every good relationship started on Twitter. Twitter DMs.
Yeah, but you were working at Kiva at the time.
Yep.
And you had just launched Kiva Newark.
With Mayor Cory Booker.
That's correct. And we were looking to do some new things in Louisville. And I was like, wow, that's cool. How do we get that here? And so I tweeted at you guys and you called me up.
Yeah. And here we are.
Here we are, friends.
6 years later.
I know. It's been fun. It's been a lot of fun.
Yeah.
So I wanted to actually dive further back.
Let's go way back.
Way back. So talk to me about the early Jonny. The Jonny growing up. You went to Cambridge, but even before that, what are some of the earliest moments you have that kind of, as you would put it, or as you think about it, shaped some of your worldview and how you think about community and the role of business and the role of money in community?
Yeah, so I think I would look at my parents. I mean, growing up, we were part of a church community, and my mom and dad were extremely generous, I would say, in their time and in their financial resources. So my mom and dad kind of started this house, basically bought this house and were housing homeless people in there. And that was a really kind of eye-opening experience, I think, for them, for me. So I think they kind of, from a very early age, like instilled in me like this idea that it's not really just about making money. I mean, they were both like, successful financially. My mom was a doctor, my dad's an accountant. They did fine. We always had enough money, etc. I think they spent 7 years working at Kiva as a non-profit. Now I'm working for a startup, Wefunder. I started my career in management consulting. My salary now is probably about half what it was when I left there 10 years ago, which is so financially some of the career decisions I've made over the last decade have been not the wisest ones. But I think, I've made some of those decisions because, as the podcast name suggests, it's about more than profit. It's about more than just making the most money possible. And I think I get that a lot from them. I then, before going to university, I went to teach in a school in Zambia for 8 months. And so I saw a lot of poverty firsthand there, whether in rural areas of sub-Saharan Africa or in inner city slums. Yeah. And so that I saw that firsthand, and it was like that instilled in me or kind of reinforced in me, desire to be working towards more economic justice in the world. So,
so other than generosity, it's amazing because I've done several of these interviews so far, and it's really interesting to me that the influence parents have had, and so it's really neat to hear. Is there a moment? Is there a memory that's stuck in your head specifically? You mentioned this homeless house that your parents kind of helped initiate and run, and then your experiences in Zambia. Is there a moment where you're like, wow, this is different. This is,
So there's, I don't know if my dad will be happy with me saying this, but I'm going to anyway. So there was one moment when I was like, wow, where, in the Bible, it talks about tithing, right? Giving 10% of your money away. So my mom and dad would tithe. And, my dad would talk about tithing on your gross income as opposed to your net income, i.e. before taxes. Tithe on that. And then I think they said, well, we're pretty well off. Like this tithe isn't even really hurting us financially. So above a certain income, they said, let's do a double tithe. And then at one point he was like, you know what? Like above a certain income, we're just going to give away 90% of our money. And then that year, one of my relatives died and left them quite a bit of money. And they gave away 90% of that because it was over the threshold. And I remember listening to that and saying, firstly, well, that's my inheritance. What on earth are you thinking, Dad? No, but more seriously, that's just that was one very, very powerful like example of generosity. That's the kind of values I think they instilled in me.
So did you ever talk about it?
Not
or is it just something
really.
you saw?
Like he told me that like one time. We didn't really even like talk about it. It was more, and at the time I probably didn't even think about it. But now looking back and reflecting and thinking, why did I work at a nonprofit for 7 years? Why am I working at a very mission-driven startup right now? Making kind of financially dubious career choices. And looking back, I think it's because of this value system that I have. And I think looking back, that was largely instilled by them.
Yeah, that's great. So the value system, could you define it? I actually have folks on my team sometimes write out their life principles. Mm-hmm. So one of my heroes, I've mentioned this before, is Colin Powell, and he has kind of like these 13 principles that help govern decision-making in his life. And so I actually have encouraged members of my team to kind of like, what are those principles that help dictate your decisions or what you pursue in life? If you were able to distill a couple for me that you've learned over your life, generosity obviously seems like one of them, but what are some others that have driven, you think, some of the decisions you've made?
I think I would struggle to articulate it. I think from a career perspective, I think I've always valued optimizing for learning. So that was one of the reasons I think I went into management consulting out of college. I mean, it's probably tough to say there's much kind of save the world, impact points working at Oliver Wyman, but the learnings there were incredibly rich, both from the type of work and from the people. So certainly kind of optimizing for learning, and then both at Kiva and at Wefunder, the learning has been super, super rich. And then I feel like, especially going to Kiva and now at Wefunder, I would struggle to articulate this, but there's something around just like, I don't know, working towards a bigger mission than yourself. And so I get really, we'll probably talk about this, I get really excited about the vision of, Kiva and Wefunder as democratizing finance and, enabling anyone to participate as an investor in startups, or getting more capital flowing to women or founders of color. And that's like a bigger goal. I look at a lot of the challenges of the conventional financial system we have. I think it's leading to a lot of inequality. It's leading to a lot of kind of restriction of access to opportunity. And so kind of dedicating my career to working towards like changing, that system for the better, like striving for more economic justice in our financial system. And one thing a third thing, maybe I'm just kind of spitballing here. This isn't kind of, very well thought through, like Colin Powell's 13 principles. But a third one would be in the last few years, since becoming a dad 3.5 years ago to my daughter Felicity, now I have a son, Carlisle, who's 18 months old. So in the last few years, just being present for them, and there's a definite trade-off for me from a work-life balance perspective. Wefunder could be all-consuming, could be 100-hour-a-week job easily, but I've deliberately made a trade-off to, make sure I'm home at 6 p.m. to hang out with them before they go to bed. So those would be 3 principles, but that last one kind of coming in more in the last few years.
Yeah. Well, and I think that can carry over into beyond a dad. It might be something that's more prevalent, but I think in our friendship for the last couple of decades, as you mentioned, but just being present with friends, you've been available if I'm in San Francisco or wherever. I think presence is an important thing, just to be present with people. So it can be at work, present with the people you're working with, present with your coworkers, present with your customers. Yeah. But I think that's a good principle. Yeah. The optimize for learning is interesting, because I did want to dive into the Oliver Wyman a little bit, because I remember you and I talked offline about your shift and, what you were doing at Oliver Wyman. It is an interesting path, learning all these principles of generosity from your parents, going to Zambia and teaching among very impoverished communities, and then going into management consulting. So it's interesting to hear you say it was a great opportunity to learn and grow. But then there was a point where you were doing lots, and you were actually doing really well. at Oliver Wyman, but you were not fulfilled. So
Yeah.
maybe talk to me about the transition from Oliver Wyman to Kiva. I know it was a sabbatical where you took a time and they gave you opportunities to go and volunteer or work, if you will, with a nonprofit, which kind of led you to Kiva. But what was going on in your life at that moment and in your thinking that has really kind of, I think, refined itself into what you articulated around democratizing capital and access for people everywhere?
Yeah. I mean, I think the lack of fulfillment only became apparent, I think, after I went to Kiva. So I did 4 years at Oliver Wyman out of college, and then I went to volunteer at Kiva for 5 months in the summer of 2009. And that was just, something that other people at Oliver Wyman had done. They had this scheme where you could go and volunteer for a nonprofit. They paid you like 40% of your salary while you were working there. Then you came back and you had to like commit to another 6 months at Oliver Wyman after you got back. So I got back and ended up doing another 1.5 years. But it was only going to Kiva and seeing the other side that kind of opened my eyes to, oh, wow, like, there's a world where I can have a job and, be also surrounded by super smart, motivated, driven people like I was at Oliver Wyman, but also have a little bit more of a work-life balance and also feel like the work I'm doing is, really making a difference in the lives of low, moderate income people around the world. But I didn't really kind of acutely feel that I was missing that when I was working really long hours at Oliver Wyman, because you're like on the treadmill, you're getting promoted, you're getting a great salary, and it kind of sucks you into that world. And it was only stepping out of that world for a few months that then I was like, oh, wait, maybe I need to kind of rethink a little bit here. And so then 18 months later, I left Oliver Wyman and joined Kiva full time. And by the way, like I actually really like my time at Oliver Wyman. Sure. Like not just from a learning perspective, but the people were amazing. Like the work was really, really interesting and varied. And so I have good things to say. A lot of people are pretty jaded, I think, after leaving management consulting, but I kind of enjoyed my time there.
Well, it's interesting. Drucker is quoted saying sometimes there's this, what if we develop our people? A junior or a vice president came to him once. What if we develop our people and they leave? And Drucker is quoted as saying, well, what if we don't? And they stay. And so it's interesting. I think what a neat offering that Oliver Wyman had to even allow that for you to explor those things.
And I always wondered what the ROI on that program was. Yeah. It's like, because quite a lot of people, I think, had my experience where they went to a non-profit, let's say, and kind of said, oh, actually, I kind of prefer this lifestyle. Sure. But then maybe that was the better thing for them anyway. So
yeah. Well, and I think, so talk to me, going to Kiva, you were decently early on. Kiva had exploded internationally, but you kind of came in, and I think your story is unique and could be super helpful to some folks listening. You were, by and large, an entrepreneur. So Kiva had been going internationally for some time, but you're the founder of the Kiva US, which was a brand new initiative, which kind of built within this bigger nonprofit, trying to explore like how do we do this thing that we've been doing in emerging markets in our US context, our backyard, recognizing that many entrepreneurs that we see in our communities across the country still lack capital. What was it like? What were some of the lessons that you could point to that you learned? Because I think that's a unique experience. It's different than like, I've got an idea, I'm going to go raise some capital and start this company. You're resourced to a certain degree, but it probably has to come with its own challenges, trying to figure out the bureaucracy of what's already working and how to get attention on this new kind of incubated startup within a company, and how to merge the two over time.
Yeah. I think there were definitely pros and cons of spinning up Kiva Zip, which later became Kiva US, as part of a bigger nonprofit, right? Yeah. So on the pros side, I always had a salary. Like I probably couldn't have, I probably wasn't like entrepreneurial enough or risk kind of tolerant enough or, financially solvent enough to just go and do that myself and like start it from scratch without like having a salary. And so that was huge, or Kiva's brand. By that point, Kiva already had hundreds of thousands of users, right? And super credible brand. Like Bill Clinton had already endorsed it. It'd been on Oprah, So to start this crazy direct lending at 0% interest to small businesses in the US thing in itself would have been very, very hard. Like Kiva's brand certainly helped us to get in the door early on with nonprofits that are working in economic development around the country, right? Or to get Cory Booker to take notice when we launched Kiva Newark. So, we had an office, we had a lawyer who was incredible and, knew the securities laws inside out and could advise us on the right path. We had an engineering team that could build the website. Like Kiva's, one of Kiva's best ever engineers, like built the Kiva Zip website in a couple of months. And like, if I'd had to go and try to find a co-founder and, so there was many, many ways in which I think if we hadn't done it as part of Kiva, this thing never would have got off the ground. And then, of course, there's some downsides as well. So you mentioned bureaucracy. A big one, actually, was kind of interesting, was around the mission drift question. So Kiva's mission was, it actually changed recently, but Kiva's mission originally was to connect people through lending to alleviate poverty. And those last words, alleviate poverty, most lenders on Kiva, most staff at Kiva, most stakeholders saw the poverty alleviation as international. We're lending to women in, rural villages in Kenya or Cambodia, right? And so then we came along and said, well, we're going to alleviate poverty in the US. A lot of people said there is no poverty in the US, or at least some of these borrowers that you see on the site, they look kind of like middle-income white dudes like in San Francisco. That seems quite far away from Kiva's initial mission. And so there were a lot of people who said, Kiva should not be doing this. We should stay focused on international poverty alleviation. So that was the mission drift question. And then, from a business model perspective, the other difference, it wasn't just we were doing Kiva in the US as opposed to international, but it was also we're lending directly to borrowers as opposed to through these microfinance institution intermediaries. Yeah. And so that was a new business model. And so that's essentially like if Safeway or Kroger starts to sell online or like encourage customers to use the online store, then you've got the store managers who are like, no, it's really important that customers come into the store because then they can feel the Kroger brand experience. And so this tension of like an established business kind of almost like disrupting its own business model from within is being covered in the innovator's dilemma, is the kind of thing that makes it very, very hard for established incumbents to kind of change the business model in this way. Yeah. And so that made it hard. And I think there was always kind of right from the get-go kind of skepticism around, is this model going to work? And, it's quite an expensive, right all the way through the 7 years I was there, right up until the end, there was a lot of kind of pushback on, whoa, this is a really expensive way for Kiva to do loans. Turns out it's a lot cheaper when actually the boots on the ground, like actually meeting the borrowers and processing repayments and doing the end, service component is another organization, a third-party microfinance institution. So if we're taking on that as well, whoa, that makes this model much, much more expensive for Kiva. So then the CFO is looking at it like, I don't know if we can afford to do this. Yeah. So those like constant tensions were prevalent kind of all throughout the 7 years. And that was just, that was one of the tough things. Yeah. Whereas now the difference at Wefunder, like everyone's rowing in the same direction. Everyone is aligned. You don't have to waste any energy kind of persuading people that this new direct program is a good idea. Yeah. Because everyone's just moving in the same direction, which just means you can move so much more quickly.
So if you could go back to early Kiva days, would you do it again?
Yeah, I would for sure. I'm super proud of what our team did for the 7 years I was there.
What would you tell? I mean, because I think the challenge you brought up is a real one for many larger corporations. So Kiva at that point was more established. So it's just the struggle of trying to figure out how to be innovative, how to test new boundaries, how to provide more opportunities for entrepreneurs everywhere. So it's a real challenge. Is there any advice or?
I actually think looking back, the way that we did it was pretty good. I wouldn't change too much. And I would give a lot of credit to Matt Flannery, who was one of the co-founders of Kiva. And he really, I think, him and Premal Shah, another co-founder, were really the driving force for testing this more direct model with Kiva Zip. And so I remember one meeting early on. So I'd just come out of management consulting, right? And management consulting is lots of meetings, lots of PowerPoint decks, lots of stakeholder engagement, right? Hey, let's get everyone around the table and build consensus, blah, 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 like you do in big companies. And so I was like doing a lot of this. We'd have a working group meeting on Kiva Zip every week and present a PowerPoint deck. And Matt was just like, and he's a founder, right? He's an entrepreneur, way more of a founder than I will ever be. But he's just like, dude, you're having too many meetings, too many PowerPoint decks. I want you to like go into a silo, don't talk to anyone, get your head down and like move as quickly as you can. And, that then, years later had ramifications in terms of like maybe trust and like people not feeling bought in.
Sure.
But I think that was brilliant advice. And if you're doing something kind of, disruptive, potentially, controversial, you got to do that. So he advocated for that. He pushed for that and we did that. And when we moved to that enabled us to move much, much more quickly. And then he would give us a ton of air cover. So if other people on the team were like, I don't really know what these Kiva Zip guys are doing, then Matt would like, kind of say, oh, it's fine. Like, he was like the champion and as the CEO of Kiva, like giving us a lot of cover. So that worked really well. And then he left, and then that became a little bit more challenging. We didn't have the air cover. Then we had a new CEO come in, Martin, and he again was like really enthusiastic about what we were doing. He saw it was a great way to grow the Kiva lender base by these US borrowers like bringing their own networks to lend to them. And so having that air cover that then enables you to kind of not worry all the time about trying to communicate what you're doing or getting people on side and enabling you to execute and move as quickly as possible, that's the critical thing. If you don't have that, then you spend all your time trying to like persuade everyone. They're probably never going to be persuaded because if the store manager at Kroger's end of year bonus is tied to sales in store, then the last thing he wants to do is like see more revenue flow through the online channel, right?
Yeah.
So you got to have the air cover. You kind of got to silo it off and encourage that kind of disruptive entrepreneurial team to move as quickly as they can.
So then you go to Wefunder.
Mm-hmm.
So I've got a quote from you here, and it says, I live in the heart of Silicon Valley, which you still do and you have for a while, in the era of technological revolution. I look around me and see affluence unparalleled in the history of the world.
This is an eloquent quote.
I know. I found it to be...
You sure it was me?
It was you, yeah. Talk to me a little bit about that quote, because I think transitioning to Wefunder, because I feel like what you've been focused on as a person, your worldview and what you're about, has really kind of taken shape through your experiences at Kiva and now at Wefunder. So talk to me. Can you expand on that quote a little bit? Like, what are you, as you juxtapose what you see and what you're experiencing in the Valley, this affluence with the poverty and the inequity that exists? Can you expand on that a little bit?
Yeah, I think probably the next part of that quote, I can't remember where that was from, but probably the next part of that would have been, we're in the like Silicon Valley in the early 21st century is like where it's at, right? It's like, this is a century of technology. Silicon Valley is the epicenter of that. You got all these IPO millionaires and billionaires. This is an affluent place, and there's a lot of homelessness in San Francisco. And if you look at most metrics of economic inequality in the US, by the way, globally, we're doing better now than we were 100 years ago, right? A lot of people in China have pulled themselves out of poverty. India, Africa, South America, even Africa now is like starting to grow economically, I think. So globally, there's actually some positive indicators. But if you look in the US, median household wealth has been flat for decades. Like CEO pay is up 1,000% in the last 30 years. Like pay of the average worker is up like 10, 20%. Like more wealth being concentrated at the top, and life expectancy is now declining. Suicide rates are up, so there's a lot of big problems around inequality. And so, yeah, both at Kiva and at Wefunder, I guess I'm been excited about these like democratic funding models, crowdfunding of zero interest microloans at Kiva, crowdfunding of equity and debt investments at Wefunder. Like I kind of am hopeful that just as in politics, if you go from like a monarchy or an aristocracy where there's like gatekeepers that are controlling decision making, then you go to a more democratic political system where people have a vote, individual people have a vote, and initially is men and then women and then African Americans. More and more people are getting the vote. Hopefully over time that's leading to more equitable political outcomes. That's the high level, very abstract vision for finance, where if you can take the financial power out of the hands of gatekeepers and empower ordinary people to make small investments in entrepreneurs in their own community, maybe we can get to more equitable allocations of capital. Maybe we can get to more, kind of positive social outcomes in our financial system. It's quite, I don't know, it's quite abstract, but.
And what, in your mind, what does that lead us towards? Like, so it more equitable outcomes equals what in our communities?
Mm-hmm. I think, some examples would be more, right now there's a cycle, right? There's a kind of a bit of a vicious cycle where, let's say African American household wealth is 10% that of white household wealth, right? So it's then harder for African American entrepreneurs to start businesses because, they don't have like friends and family networks to tap into for that initial capital. Most VCs are white men, and so maybe it's harder, and not much capital is going. If you just look at the numbers, right, like 1% of venture capital went to African American founders last year, I think, versus like 11-12% of the population. So, it's harder for African American entrepreneurs to access capital. I think it's a similar story on the commercial loan side. And part of it is a supply issue probably, but there's also been some pretty robust studies done, I think. I think NCRC did a study where they had like a black small business or pretend small business owner go into a bank with exactly the same business plan as a white pretend small business owner. And the white small business owner was like encouraged to apply and go through the process, and the black business owners were not. So it's not just a supply issue. But so then it's harder for African American entrepreneurs to access capital. Then it's harder for them to build and grow their businesses. So then there's less kind of growing businesses that are owned by African American entrepreneurs. And that means that wealth creation through entrepreneurship and through small business ownership is more difficult, which then means it's harder for African Americans to build wealth in that way. And so then the cycle persists, right?
Yeah.
And so, the idea of like both Kiva, Wefunder, democracy applied to finance is if by enabling more Black Americans to become investors, more women to become investors than today, then they will fund more Black entrepreneurs, more women entrepreneurs. That will mean that those entrepreneurs are able to build businesses, and those businesses will create wealth for them. And gradually we can chip away at this wealth inequity where currently I think like Black kind of household wealth is projected to go to zero in, I don't know the date, it's like a few decades into the future, but so it's like more capital flowing to businesses, give more entrepreneurs of color or low-income entrepreneurs a shot, enable them to create wealth in that way, and kind of over the long run start to chip away at economic inequality. And obviously investment and entrepreneurship and startups, small business, that's like one component. There's many, many other components of wealth inequity, right? Like housing and criminal justice reform and money in politics and healthcare and blah, blah, blah. This is only one aspect of that, but that's the aspect I've been focused on now, both at Kiva and Wefunder for the last decade.
I've got another good quote of yours.
Uh-oh.
I know, it's good. America's finance system can be a mechanism for reinforcing the interconnections between the people that fuel it. If that's true, then perhaps that system can help bring people together rather than drive them apart.
Mm-hmm.
Maybe our economic transactions can shine a light on the fact that we are all human beings, people who want the best for our children and our world.
I'm very idealistic.
Well, but I think the reason I brought that quote up right now is earlier when you were talking about the mission of Kiva was to connect people.
Mm-hmm.
And as I'm hearing you talk about the role of wealth and business, there's a theme I'm picking up on as it relates to the role of business in community, the role of money to connect people.
Mm-hmm.
Some would say that's not the role of business.
Mm-hmm.
Obviously there's counter narratives as it relates to like profit and purpose. How would you respond to someone that disagrees, that says, you know what, I hear what you're saying, but that's what we have social services for.
Mm-hmm.
That's what the government is for, and business should just focus on making products and making money.
Mm-hmm.
What would you say to that person? Because you're in the valley, and I think sometimes there is a valley bubble, and I live in Louisville, Kentucky, and so there are parts of our country where this notion of kind of profit and purpose being not opposed to one another, but actually something we can pursue in unison is still a questionable thing.
Yeah, I mean, I think there are two elements of that quote. There was one around like our finance system kind of bringing people together, and then there's another of our finance system kind of having a social impact or a double bottom line, or kind of looking beyond kind of financial profit. So on the second question, I mean, I don't know. I just for me, like, it's important that we're building a world that is a good world, and looking after people and not casting them aside, and looking after our environment and not trashing that. And if business and the market, in quotes, is driving us in a direction that is having very negative outcomes in a lot of areas, then like a higher GDP growth rate, I don't think is like enough of a kind of compensation for that. I don't think GDP growth should be the goal, actually. I think we should have a broader kind of set of indicators around whether we are kind of progressing as a society, which might be median wealth as or median income as well as mean income. GDP is obviously based on mean income, or it might be life expectancy, or it might be substance abuse metrics, or mental health indicators. I'm sure I don't know what all the metrics should be, but I just pretty passionately believe that we should be kind of moving in that direction. Wefunder is a public benefit corporation. We're a B Corp, so I feel there's more of a movement right now from like 20, 30 years ago. I think there's more of a movement. I feel like we're on the right side of a trend here, especially like millennial generation seems to be trends around conscious consumerism. So I'm optimistic we're moving in the right direction. The other piece, the connection piece, that's why I was joking that I'm like super idealistic about this stuff. But that was like, I remember one example on Kiva where, we had this like farmer in rural Arkansas who was like raising Kiva, I would, statistically probably like a Trump voter, and this was at the time, I was writing this blog at the time of like, Trump, and I was like very feeling politically polarized in America, right? And there were lenders, kind of loony liberal lenders in San Francisco, like, lending to this redneck farmer in rural Arkansas, right? And then vice versa, right? And I just thought that was really a cool example of how, normally if the finance system we have is like impersonal institutions and like impersonal transactions, then if you actually can see who you're lending to and there's that like human connection there, then that's a new financial system at Kiva, now Wefunder, where you're actually increasing human connectedness in the finance system that we're reimagining. And that's really cool. And I thought maybe there'll be some kind of cool side benefits to come out of that. It again, kind of abstract, very
well, but I think it does connect to the first question, because
Yeah.
I think ultimately when we connect as humans, and if we think about the role of business, it's really seeing the humanity. And so I think, as a business owner, profits are not evil, but at what expense? And so I think as you're articulating, like, how do we think about GDP? How do we think about what the metrics on success are? We employ people. We have customers that are people. We purchase goods from suppliers that are people. And I think when we can factor that value back into the equation, how might that change our understanding of profit? And is it extractive? Or are we actually trying to do something that's additive? And so I think the notion of humanity and connection, when we can see the other for what they are, whether we disagree on X, Y, or Z or not, that shouldn't that be the role of communities in business?
Yeah,
something like that.
I think so.
So you're now at Wefunder. You've got this laser focused vision. What are you excited about? And if you could, because I think you're pretty good at this, like 5 years from now, 10 years from now, what do you hope Wefunder is accomplishing? Where as in its role, as a public benefit corporation, lined up behind this notion of democratizing access to capital for entrepreneurs across the country? What do you hope Wefunder is able to accomplish in that time frame to really see the needle move towards this connectedness that you talk about?
5 things off the top of my head. One, obviously a lot bigger than today. We did about 40-50 million of investment volume last year, which is a drop in the ocean. So obviously we want to be a lot bigger, having grown a lot. And that means essentially the result of that is more investment capital flowing to early stage entrepreneurs.
And is that more just validation from your perspective? Like more money just means there's the validation of the platform and just crowdfunding in general?
It does, but I think the goal for me is, I think we as a company think we should give more chances to founders throughout America, probably the world, but let's start with America. So right now, there's not enough capital going to startups. There should be more businesses starting up. If you look at the stats, there's been a decline in small business creation in America over the last few decades. Probably that's caused by lack of capital, at least in part. And so if we can get more capital flowing to startups, this is just going to do good things. More people, innovating on this technology that's going to tackle climate change, or, creating jobs in their community, or even just having a shot at being an entrepreneur, and that teaches you some great life lessons and makes you into a better human.
Sure.
So it's about giving more business owners, more founders their shot than is happening today. And
Right.
and I think most, if you look, just take a step back, probably where the market is at today in terms of capital going to entrepreneurs is below where you would ideally want to be as a society. I don't have much data on that. It just feels, again, if you look at the stats of small business creation, it feels like there should be more capital going to small businesses and startups from a kind of socially maximizing perspective. The second thing is breaking that down. So, right now, 2% of VC capital last year, I think, went to women-led companies, 1% to African-American companies, 25% went to the 47 states that aren't New York, California, or Massachusetts, right? So not just more capital going to startups in aggregate, but kind of a better or a more equitable allocation by ethnicity, gender, geography. That's the second thing. A third thing, this is even more ambitious of a goal, I think, because that's mostly around capital. Getting more capital flowing to startups. It's easy to see, okay, Wefunder is a equity crowdfunding platform. Okay, yeah, getting more capital flowing, that makes sense. The third thing is actually strengthening entrepreneurs and founders and small business entrepreneurial ecosystems beyond just the money. So that's like the partnership we have with you guys, with the venture partners. You know, we do dinners at Wefunder regularly where we have founders come in. We've done XX accelerator programs for immigrant founders. We went on a workaway trip to Hawaii where we took a bunch of founders to Hawaii and we're working out of a mansion on like accelerating their startup just for a week with some like incredible like YC alumni mentors. So we don't know how we're going to do that. If we would, I mean, we're a product company. Like our CEO, Nick, is a product guy and brilliant. So we got to try and figure out how we're going to productize that. But, you know, that would be a third goal. A fourth goal then would be on the investor side. So when we talk about democratizing access to investing, what that means is like it used to be until May 2016 when the SEC rolled out Title III of the Jobs Act. It used to be you had to be an accredited investor to invest in startups. You had to be a millionaire basically or a billionaire. And now anyone can invest in startups. And there's a healthy discussion about whether that's a good thing or not. But, you know, I think we all working at Wefunder believe that is a good thing. And so enabling more people to participate as an angel investor, you know, and hopefully earning them a return so they're able to build wealth it will be the fourth thing. And then the fifth thing kind of related is, you know, by enabling anyone to participate as an angel investor, getting more people involved with entrepreneurship in their communities, you know, because again, we like entrepreneurship. We think that's cool. And we think like if more and more citizens in America are thinking about where their dollars are going and they're not just like parking it in Starbucks on the stock market and the money's flowing out of their community, but they're investing it in this business in their community. Or like maybe they are passionate about space. I met with a friend for lunch the other day and she said her son is like, you know, he's 17 and he's really passionate about space. And I was like, well, we had two companies in the space sector fundraising on Wefunder right now. He should go and look at them and consider investing in them. And maybe then he invests and then goes and does an internship with them. Like the whole idea of being an angel. I invested in Chattanooga FC. They raised like 850 grand on Wefunder from 3,500 Chattanoogans and me.
And me.
And Bryce Butler. So I invested $125 and now I'm an owner of this soccer club, you know? I don't know if I'll make a return. I didn't look at the financials, but I just think it's really cool to be an owner of a soccer club and they're coming to San Francisco, actually to Oakland to play a game in a couple of weeks. And I'm going to go and cheer them on and I'm an owner. My name's going to be on their shirt. They had their shirt, you know this? Their shirt's got all the like names of the investors on it. And so
did you buy one so you can wear it in Oakland?
Yeah, I'm going to. And so that, you know, so that's like being an investor is cool. Being an angel investor is cool. Like you get to hang out with these smart founders. You get to learn about these things. And like that in itself, irrespective of the financial outcomes, I think we think is a good thing. If more American citizens are like participating in, you know, entrepreneurship in this way, that's going to be a good outcome.
What are some challenges? So those are some lofty goals. And I think they're really good and they're tied really nicely to the notion of connecting people. Mm-hmm. But what are some of the challenges that you think we still face in kind of fuller adoption or understanding of the opportunity that's before us?
Of Wefunder investment crowdfunding? Sure. So a lot of challenges. It's really hard. I think what we're doing, we're essentially like totally reimagining the paradigm, right? This is really hard. A lot of challenges. I think right now, if you're, you know, on the rocket ship growth path, you just graduate from Y Combinator, you know, you got like all the VCs in Silicon Valley throwing $1 million checks at you. You're not going to go with Wefunder, right? It's like, first of all, like no one's really done that before. Uber didn't do that. Google didn't do that. Facebook didn't do that. Airbnb didn't do that, right? They went the VC path. So you're like the convention, the paradigm is like, I'll go the VC path too. So, and then, so that's, then it's basically harder for us to get these like rocket ship like companies onto Wefunder because we're kind of just a new thing that seems risky and unknown. And so, and until we get those rocket ship companies, then, you know, it's going to be harder to generate the investor returns that these top VCs are getting, right? Because in venture capital investing, a lot of the returns are from the power law of like the one company that like has the $1 billion IPO, right? So it's both a question of like, how do we attract more and more founders, better and better founders, and then also it got related, like the follow-on is how do we generate strong returns for investors? So those, I mean, it's both sides of the marketplace.
Sure.
Now the cool thing is that over time, right, the network effects will kick in. So it's just like Uber, the more drivers there are, better it is for passengers, the more passengers, better it is for drivers, right? With Wefunder, we launch more founders, great companies, big audiences of customers. They recruit those customers to invest in them. They now have Wefunder investor accounts. We can market to them other opportunities. So then more investors means founders should be able to raise more money on the platform. If that means it's more attractive to founders, then we get better founders. Better founders then means it's more attractive for investors. So again, I think we're on the right side of a trend. Like you can see how the growth on both sides of the marketplace over time is just going to really strengthen this ecosystem. But right now we're kind of in that grind where it's hard to like get it to the next level.
Yeah.
But it's growing. Like we
is.
roughly doubled last year. We plan on even accelerating that this year. So
That's great.
we're on the right path.